Changes made to the prompt payment code in order to ease late payment burden. Just Cashflow launches a VAT on purchases loan, and a look at the regional distribution of CBILS and bounce back loans. All of this in the latest Business Finance Bulletin. I'm sure you'll agree there's nothing more annoying than issuing an invoice with a very clear payment date and then having to sit back and wait what seems forever for payment to be made. Well, good news which will hopefully ease this cash flow burden. The prompt payment code has announced some changes which will encourage members to pay invoices earlier. Now, the prompt payment code is a voluntary code and there are approximately 3,000 businesses signed up across the UK. Under the code, as it stands at the moment, members have to pay 95% of their invoices within 60 days. Now, the prompt payment code realizes that 2021 is probably going to be the year when cash flow is more important than ever. So it has announced a change whereby those members now pledge to pay invoices to small businesses within 30 days. Yet 95% of invoices issued by smaller businesses, defined as employees of less than 50, will be paid within 30 days. Larger firms, well, those invoices can still be paid within 60 days. Now, it's estimated that the amount of money sat there on unpaid late invoices is about £23.4 billion. So it's not a small amount of money we're talking about here. And changes like this can help make life much easier for small businesses. So under this revision, financial directors and CEOs will be personally responsible and will personally sign the code to make sure that they are bought into the idea of paying small businesses within 30 days. They also have a logo to display on their website and emails in order to kind of improve transparency and hold them to account. And also they are signing up to a kind of dispute resolution service where they will open themselves up to investigation if there are any complaints that they're not sticking to the 30-day rule. Now, this change comes into effect from the 1st of July. So a couple of months to go, but nevertheless, good news. If you want to know more about the prompt payment code, go along to its website, which is promptpaymentcode.org.uk. When arranging commercial mortgages for clients, they're often surprised when we ask the question, is this property subject to VAT? Not many people realise that certain commercial premises can be subject to VAT, and so it's an extra 20% on top of the purchase price. Now, if you're not a VAT registered business, then of course you can't claim that VAT back. It's an extra 20% on the purchase price, which goes straight to the government, an extra burden for you, and often can be a deal breaker. However, if you are a VAT registered business, of course, you can claim that VAT back through your normal VAT return. But it does lead to a problem, a cash flow problem. You still have to find that 20% up front, and it could take 3 to 6 months to get the VAT back from HMRC, a big cash flow gap to fill. Well, Just Cashflow, the alternative cash flow provider, has just launched a new VAT on purchases loan. If you do have a cash flow burden kind of launched on you because you're buying a commercial premises that's subject to VAT, you can now get a VAT loan from Just Cashflow from £10,000 up to a maximum of £1 million for a period up to a maximum of 6 months. The interest rate for an unsecured loan is 0.075% per day or 0.05% per day if it is secured. So this is a great way of plugging this cash flow gap. So if you do find yourself in this position of having to pay up VAT and waiting for a few months to get it back and would prefer to finance this, just go along to the Just Cashflow website to learn more. And their website is just-cashflow.com. Which parts of the UK and sectors have been accessing the bounce back and CBILS loans? Well, the British Business Bank has issued an analysis of the distribution of funds. First of all, let's have a look at which parts of the UK are accessing the funds. Well, perhaps not surprisingly, given the number of businesses based there, 34% of the funds have gone to businesses based in London and the South East. Next up, 11% of funds have gone to businesses based in the Northwest. And then thirdly, it's businesses based in the East of England. 10% of the funds have gone to support businesses in that area. So you see a good geographical spread. Now, what about sectors? Well, first of all, let's have a look at CBILS. Now, on the CBILS loans, 18% of loans have gone to businesses in the wholesale and retail sector. Perhaps not surprising given the pain that they're going through. Next up is the manufacturing sector. They've taken 13% of the CBILS loans. What about bounce backs? Well, the bounce back's obviously more popular, £50,000 and below, and here it's slightly different. Top of the table is the construction sector. They've taken 17% of the bounce back loans, followed by, again, wholesalers and retailers who've taken 15% of the bounce back loans. You can see an interesting analysis there of where the money's going. Now, of course, this scheme is still open, and as I talk at the moment, is still open until the 31st of March 2021. So if you haven't accessed the scheme yet and you have been negatively affected by COVID, you still have plenty of time to apply. Well, that's it for another bulletin. As ever, I hope you enjoyed watching. And if you did, please don't forget to give it a like, a share, and subscribe to this channel. So that's it. Look forward to being with you again next time. In the meantime, have a great, successful, healthy, and profitable week.